So you decided you're ready to buy a home. Congratulations, this is a very exciting time. Now, before we get any further, let's talk about something that may bring you down to reality a little bit. Closing costs. So the reality is that price of the home does not include the closing costs, which are added on top of your down payment, among other things, assuming you're using a loan and not paying with cash. It's a different video. Now, they are a necessary part of buying home, closing costs, assuming you're taking out a mortgage to purchase your home, which is what the vast majority of Americans do. Now, first up, we have your lender fees. Now, there's your loan origination fee. This is a charge from the lender to cover the administrative costs of processing their loans, how they make their money, and it typically ranges anywhere from 0.5% to 1% of the loan amount. Then there is your appraisal fee. Now, lenders usually require an appraisal to ensure the property's value matches the loan amount. The cost varies, but typically it falls between $300 to $500. Next, we have your credit report fee. The lenders pull your credit report to assess your creditworthiness. It's typically around $50, so not much. Now, following this, we have your underwriting fee. This fee covers the cost of evaluating and approving your mortgage application, and it may range anywhere from $400 to $1,000. Then you have discount points. They're just called points, but this is an optional fee paid upfront to lower the interest rate on your mortgage. Each point typically costs 1% of the total loan amount to lower your rate 1/4 of a point. Now, sometimes the seller will give you money back from the sale of the home to accomplish this. When this happens, this is great news for the buyer. Moving on, we have third-party fees. Now, first, there is your title insurance. Now, both the lender's title insurance and the owner's title insurance are typically required. The cost varies depending on the property value, but can range anywhere from $1,000 to $3,000 for an owner's title policy. It's customary for the seller to pay for the title policy, but if you're in a multiple offer situation, you as a buyer may want to be more competitive, in which case you would pay for this. It will make your offer seem stronger. It's basically more money in the owner's pocket. Next, we have escrow fees. Now, escrow companies handle the transfer of funds and documents during the closing process. Escrow fees can range from a few hundred to over $1,000. And next, we have your survey fee. A survey is often required to verify the property's boundaries and ensure there are no encroachments or other issues. The cost can range from $300 to $700 or more. Is there already an existing survey with the property? If there is, that's great. However, your lender still has to approve this survey. If they don't, you'll have to get a new one. And since it's typically the buyer's lender that's requesting it, this cost tends to fall towards the buyer. With that being said, all things in real estate are negotiable. It just depends on your particular deal. So the seller may be willing to pay for this if, for example, the buyer is tapped out cash-wise, and this would help the sale of the house go through. It all depends on each specific situation. This next essential cost is your home inspection. Though it's not required, a home inspection is highly recommended to uncover any potential issues with the property. And they check for many things, but the big four are your foundation, roof, plumbing, and your HVAC systems. Now, some issues may require inspection by a specialist beyond just a general inspection. Now, general home inspections cost vary, but they typically range from $300 to $500 or more depending on the size of your house. Then we have your recording fees. Now, these fees are paid to the county clerk to record the deed and mortgage documents. The costs vary from county to county, but they can typically be from $100 to $300 or $700, just depends. The next category concerns prepaid expenses. Now, first up, we have property taxes. Now, depending on when property taxes are due, you may need to reimburse the seller for taxes they've already paid or prepay taxes for the upcoming period. Then we have homeowners insurance. Now, lenders typically require proof of homeowners insurance before closing. You may need to pay the first year's premium up front. Don't forget prepaid interest. Depending on when you close, you may need to prepay the interest on your mortgage from the closing date until the end of the month. Some other costs you need to anticipate are attorney fees. Now, while they're not always required, some buyers choose to hire an attorney to review the closing documents. Attorney fees can vary widely. And there's also a home warranty. Now, some buyers opt to purchase a home warranty, or better known as a residential service contract, to cover the cost of repairs to appliances in the home or systems like your HVAC. So while prices may vary depending on the coverage, but you can expect to spend anywhere from $500 to $2,000 or more depending on how hardcore you want to be. Lastly, we have HOA fees. Now, if the property is part of a homeowners association, you may need to pay prorated HOA dues at closing. It's important to note that closing costs can vary depending on factors such as purchase price of the home, the type of loan you're getting, and the specific service providers you choose. It's always a good idea to shop around and get estimates from multiple lenders and service providers to ensure you're getting the best deal possible. Finally, you will receive a loan estimate and closing disclosure from your lender as it gets closer to the closing date, which will outline all the closing costs associated with your loan. But typically what I tell my clients is you can expect to pay anywhere from 2 to 6% of the cost of the home, but more often than not, it's somewhere closer to 3%, just something to keep in mind.